Good morning and welcome to Beyond the SEAF model. I am Jack Kosar and this is effective for June 10th, 2024. Let's get started. Signals for this week, technology, utilities, and communication services. This was a repeat from last week, so it was kind of nice to see that consistency. We've been seeing a little bit of churning going on, especially in that three spot. So having the same signals again and again kind of is what we're looking for to kind of build this momentum. I'll highlight this a little bit more in the heat map in just a second. But a couple of key things to note, we're kind of keeping an eye on healthcare right now. First in the trading week, fourth in the tactical month, very much being held back by the strategic quarter. We'll highlight the rainbow chart in a minute, but overall, healthcare is kind of a spot to watch. It is sitting on the neutral territory, but again, due to the strategic quarter, kind of seeing the reverse from financials going from 7 to 8 to 10. Money flowing out of financials pretty strongly. And another keynote highlight here is energy continues this kind of fall with an extremely large outflow, something that we hadn't been seeing in terms of numbers, about 0.43%. Otherwise, everything's pretty middling. Going into our heat map, this is what I like to see. I like to see these greens kind of clump up. What that means is that we're seeing some momentum across time periods, and things are kind of flows are going more or less expecting Dilly where we want them to go. Seeing this clumping, obviously with healthcare being 11 with that extreme red. It's going to take a minute for that to fall off as those flows were pretty hardcore coming out in the last quarter. But seeing what 0.31% increase. Remember, about average is 0.4% that we've seen over the last couple of years. So having a 0.3, what we have a 0.3% increase for healthcare is not something we've seen in a minute. Technology relatively strong at 0.25. I think what I need to do is I also need to do a more recent average study to see what we're seeing for the year versus what we're seeing historically. I will have that for everybody next week. Obviously, you can see here energy having a pretty strong outflow, being held up by the strategic quarter, almost an inverse to healthcare, and consumer discretionary continuing at the bottom. Overall, this is a little bit better, like I said, a little bit better for what I'm seeing in terms of consistency across a little bit stronger flows this week than we've seen in previous weeks. New normal is not what we're going for, but it is nice to see these things trend a little bit in the right direction. Heading into our rainbow charts, first off, communication services sitting in favor, having a nice upward slope. We had a little bit of a dip here that went into our neutral void, but now that we're up into favor, we seem to be returning on trend for the positive relative performance. Communication services has been one of those sectors that have been outperforming on the year. So being back in the communication services is good for our overall portfolio, as there has been some outperformance in communication services. On the flip side, looking into healthcare, healthcare was in relative decline in terms of its relative performance versus SPY. Seemingly stopped at a dime here and is heading up in the positive direction. This is not a SEAF signal. Healthcare has a trading week that is relatively strong and starting to build in that tactical month. But really, in order to see this general outperformance, we need to see some sustained upward favored ranking that we just don't have yet. But we are trending in the right direction. As we can see here, going in the later part of the fourth quarter of last year, going from that kind of a deep avoid to up into positive. We did see some relative outperformance, so there is potential run for healthcare as long as we continue to see flows. Technology, a little bit of a rebound on technology's point, heading in from what was an avoid and ended up being a relative low in terms of the relative outperformance, climbing out and staying in this favored ranking, which is producing some relative outperformance. We did dip into neutral last week, potentially some managers taking some profits off as we kind of continue to rise higher. The one kind of confusing thing, kind of going back into our heat map, and just wanted to highlight, technology and communication services are relatively offensive sectors, or considered offensive sectors. But on the flip side, utilities is a relatively defensive sector. And the point I wanted to make in kind of bringing it together is we've not seen a lot of really strong flows like we've seen in the past. As I said, I think the historical weekly trading flow in terms of the top spot being 0.4%. And we often haven't been hitting that. This is to kind of say that I think managers are still a little bit hesitant to make a really conviction bet on anything at any point in time, which means they're going to put smaller bets on across the board. The only real conviction that we're seeing, in terms of true strength here right now has been energy at 0.43% reduction in net asset flows over the last week. The healthcare flow was a bit stronger, but in general, we've been seeing kind of this mixed match of uh, defensive and offensive stocks, waiting for the market to kind of decide in which direction it wants to go. The other thing I kind of just wanted to highlight here is that technology's done a good job here of kind of rebounding and getting its flows back. The SEAF model, and I'll head into this next, but the SEAF model, if you're going to like bringing up financials and energy at the same time here, what you can see here is not only does SEAF do a good job of putting you in the markets that are outperforming to try to pick up some of that relative outperformance, but it also tells you the markets you want to avoid here. As we're dipped into neutral, heading into a void, we have seen quite a downward sloping relative performance versus SPY, underperformance in energy, and we've seen the same thing in financials. Financials went into favored, dropped down into neutral, tried to come back up, but then dip back down into the void, and we have seen this pretty consistent relative outperformance. So just wanted to make sure everybody understands that SEAF model, wow, putting you in the sectors that are most poised for some relative outperformance as the money is flowing into those sectors. The other half of this model is looking at the money and how it's flowing out. And we're seeing some conviction bets in terms of flowing out of financials and out of energy, and seeing that relative outperformance on the decline. Managers that are using the SEEK model can use this to potentially reweight some of their portfolio, understanding that maybe they want to be a little bit lighter in energy, a little bit lighter in financials, while taking advantage of the uh, communication services and the technologies of the world. That is all I have for this week. I look forward to breaking down the SEEK model with you all next week. And everybody have a great week. Thanks.